Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Thursday, the 16th of April. I'm starting off with Eurasia Mining, where a similar position to where we saw the shares before, hovering above the 50-day moving average. This looks like a bull flag or an extended bull flag formation. 200-day moving average starting to tick up as well, bounce off the March RSI uptrend line. And the view at the moment really is while there's no end of day close back below, let's say the 20-day moving average is 0.67, we're still on for our 1.4, 1.5 pence target at the top of this rising September price channel. So encouraging there. Golden Saint next up. This has been something of a problem stock, let's just say, quite a sort of sharp or extended breakdown for the shares over recent months. A couple of positives at the moment, though, I suppose. First is the way that it looks like we've got a sort of double bottom here towards the 0.17, 0.18 pence level. I think that's actually down to 0.14 as the lowest in February, 0.13 this time. And the other plus points, in fact, are the way that we've got much higher RSI reading here on the lows for April and a rise in volume as well. So possibility that the shares are still, or are going to try and head back into this sort of range between, say, 0.018 and 0.6 over the next couple of months. Probably the wisest thing to do, though, is to wait on a decent show of momentum over and above what we've seen on the volume side. So maybe a weekly close above the 20-day moving average at 0.2 pence or the 50-day moving average 0.23 pence. As you can see, in March, the shares did actually fail at the 50-day line. So we would want to see decent support coming in at or above the 50-day line before regarding Golden Saint as finally being out of the woods. Interesting situation here at Madagascar Oil. This extended price action here above the 50-day moving average after the break hasn't actually, I don't think it's actually touched the 50-day line since it broke through or broke above that feature at 4.46 pence at the beginning of March. So that means that we could be in a rising trend channel here, which is takes the shares up towards the 7 pence level over the next 2 to 4 weeks. So an encouraging situation there. A stop loss obviously back below the 50-day line in the first instance. Quindell, haven't looked at that for quite a long time. Situation here is interesting in the sense that we had that spike towards, what was that, 180 last month after a gap, and that looked like an exhaustion gap, really. The shares have fallen back quite sharply, but have bounced off the falling 200-day moving average. And that is normally a positive sign. It's also positive given the way that we've got this bounce off the November RSI uptrend line as well. So the obvious thing at the moment is that while we're above the 200-day line at 122.90, one would regard the shares as possibly being a buy on dips and looking for a retest of the 180 zone once again. Obviously 180 seems to be a long way away at the moment, but looking for a retest of 180 while we're above the 200-day moving average at 122 pence. Finishing off with Union Jack Oil. This is a stock which sort of ground to a halt over recent weeks and months. Looking a little bit more positive here with the golden cross between the 10-day and the 20-day moving averages yesterday, and the RSI back above 50 and remaining above 50. It stands at 55. So at least back within a 0.2 to 0.3 pence range over the near term. But really, we want this stock to break the 200-day moving average at 0.26 pence to feel sort of more confident about what is going on here. As you can see, in February, the shares peaked out just around the 200-day line, the black line there as well. So a little bit of work to do there, but some encouraging signs, let's say, at Union Jack Oil. That's it for me. More updates at masterinvestor.co.uk.